Intel just cut their dividend by 65%. And the main reason they gave for this was the financial hardship they're currently under, as they're making less money than ever before due to very weak demand in the PC market, and their expenses are at an all-time high to help fund their transition into the foundry business, which I'm personally okay with. But just a month ago, Pat Gelsinger, the CEO of Intel, was asked in an interview about the health of the dividend.
Is the dividend at its current payout ratio, is that safe?
Of course, we're committed to the dividend and to a very healthy and competitive dividend.
Right.
I also polled my audience, and you guys are favoring to sell the company, which I can definitely agree with. I'm personally okay with the dividend cut, as the reason I'm investing in this company is their transformation into a producer of semiconductors, and I'm not in it for the short term. We are in year 2 of 5 for this very expensive investment phase of the business. What I'm not okay with is the CEO of Intel lying to investors. Does a 65% dividend cut sound like a competitive, healthy dividend that rewards shareholders? Doesn't sound like it to me. So if you were invested in Intel for a high yield, that's gone. The management also just blatantly lied, which makes me question their integrity. If they were honest about maybe needing to cut down the dividend, I wouldn't be upset about this, as I can see the business is struggling at the moment and it needs to get its costs under control. Paying a smaller dividend will help the company with the investment phase into the foundry business. So if you're currently holding Intel, I can totally understand wanting out if you were investing to collect that 5 to 6% dividend yield and getting paid to wait for this turnaround. Or if you're an income-focused investor, a 2% yield just won't cut it in this market, as there are much safer options that pay much higher yields. My thesis on the company is still intact, and I do see their products improving, and R&D spending is increasing, and it leads the industry by a wide margin. So I'm personally going to hold the company, perhaps add some more shares if the market sells off in a major way. If, however, there's a major market crash, I would not hesitate to sell this holding and put it into a better company trading on a big discount. And in my dividend portfolio, my total value currently sits at $20,892.81. I hold an RSP, which holds Starbucks and SCHD, which is up about 21% or up $170. I also have a TFSA, which is just under 20K, and it's down about $400 or down about 2% all time. So if you want to follow along with the channel and follow my buys and sells in my dividend portfolio and any news updates about any positions that I hold, please hit the like button, subscribe to the channel, and let's roll the intro. So in the past week, we're down about 2% or down 473.57. And in the all-time, we're down about 2%. So we were kind of neutral, and now we're in the negative just due to an indiscriminate market-wide sell-off. So it's not a bad time to get into the market and buy some stocks or start investing right now. So if you are new to investing, you want to get started, feel free to use my link for WealthSimple in the description below. And if you sign up and make a deposit, you can receive up to $3,000, and you do help support the channel. So we can see in my portfolio that some of my positions have definitely declined. Like Apple was way more in the green. Algonquin is actually holding pretty steadily in this market sell-off, but it's had its own sell-off earlier in the past couple months when they cut their dividend, but it's holding up pretty well in the volatility we're currently experiencing. We have ATD staying strong at $64. The volatility isn't hitting this one, of the market isn't hitting this one as hard, but I'll definitely be keeping an eye on it and seeing if I can get another share of this. With Aritzia, the market has been selling this one out, so it's actually trading at a very attractive price, and I'd be very interested to add more to Aritzia. With Brookfield Corporation, I added one more share, going up to 23 shares. So this one's in a nice little dip right now, nice little opportunity. So I went up from 22 to 23. With Scotiabank, I put in about $10 more. So we just bought a fractional share. So we're up to 25.81 shares. Costco is kind of going in the red a little bit. I really want this to decline quite a bit more at the. If it hits the 450 range, I'll definitely make a small buy into it. If it goes lower, I'll buy it even more. We see Enbridge is holding pretty steady as it usually does. It's very bond-like in that way that it just doesn't follow the market quite like other stocks. Ethereum is still way down, but just regular volatility is going to hinder the amount of risk that investors want to take, and that's going to affect crypto prices until investors want to start taking some risks again in the market. For Google, they're down into the 80s, so this is starting to look really attractive to me. If it goes way low into the 80s or even in the 70s, I really have to consider buying another share here, even though there is definitely some question marks around whether or not Microsoft is going to affect their market share of the browser and search and the ads business in general. But I think given enough panic, this could be a similar situation to Meta. So, Meta was trading at, below $100 very recently. And you would have bought it then. It nearly doubled in stock price in a very short amount of time just due to all the panic selling. It just got to a ridiculously undervalued point for that business. Whether you like the business or not, it is a cash flow producing business. And if you get something at a ridiculous price, at a ridiculous sale, you sometimes have to go for it if the reward outweighs the risk. And then with H yield, we can see this is going down with the general market. The American market is going down a lot more. The Canadian market held up a little bit better this week, but not by much. So this one's down. Intel after that dividend cut is in the 25 range. So, you definitely have investors bolting for the door after the dividend cut. I totally understand because, depending on your investment goals and your time horizon, after a dividend cut, a stock may not fit your portfolio anymore. So I can totally understand holding it, selling it, buying it. Any of those options could be correct. It just depends on your situation. And with Microsoft, I just reinvested the dividend I received from Apple, so we're up to 3.34 shares. Power Corp is down just like the rest of the financial sector in Canada. Smart Centers is slightly down by 3%, but still holding on pretty well relative to everything else. And TELUS is down about 4%, but I'm going to be purchasing a little bit of this next month. And then with TD Bank, they had a very interesting news about one of their acquisitions being approved. So TD just got approved for their $1.3 billion purchase of Cowen, which is an American investment bank. And then I put another $10 into TD Bank, so we're a little up over 21 shares. And Tesla's still holding on strong, still in the green. And with the passive income so far with the portfolio, we've earned $11.7931 since starting. Our annual dividends decreased a little bit due to that 65% dividend cut with Intel. So we lost about $25 of annual dividends with that. It's costing us about $2 a month. And so we went from $9.83 down to $9.60. So we're going to have to build that back up. The monthly average also decreased from $81.98 to $80.02. Weekly $18.92 to $18.47. The daily average decreased by about 7 cents. And the months to earn, $100 has increased a little bit. And our hourly wage, if our portfolio were to work a 40-hour work week, also decreased slightly. But we'll build it back up. And so far for February, we've made about $61 in dividends. So thank you for watching the video. Please like, subscribe to the channel, and have a good one.